Raghee, welcome to the show. It's been a week, to say the least, and it's been a couple weeks since we've heard anything related to Russia, the Saudi dispute. After that last OPEC meeting, things got kind of heated between the two. A lot of expectations in terms of increased production come April. Can you talk to us about what's the latest?
Great to be back, Ben. Great to see you. And, I wake up every morning right now just so happy to be looking at the markets and trading because the opportunities and the news are everywhere, but it's a lot to process. And of course, amongst everything else that we're dealing with, we have the Russians and the Saudis pumping oil to the point where if they continued on the path they're on for the next give or take 9 months, we'd run out of capacity to store it. So that pretty much tells you where we are with production. It is full tilt. I think the Saudis are somewhere near 13 million barrels a day.
Raghee, at one point I'd heard something about the president offering to step in to get involved. We know that he has a pretty good relationship, or at least it seems to be, with the Saudis. Do you think that this would help the situation, or would it just, as they say, throw fuel on the fire?
What's really interesting about where we are right now is clearly in the U.S. we have our hands full with a lot of other matters. Whenever I look at what's happening at the moment, the increased production is exacerbating something that we were already expecting from the EIA, IEA, and OPEC, which was less demand. And now what we have is just this perfect storm. And I'm sure, I know I've been listening, you guys have been talking about it. We have a perfect storm right now where we already have too much crude floating about. We now have a price war where Saudis and the Russians are rushing to refineries saying, hey, we're undercutting Brent. We're way below the benchmark, process our crude. And so I don't know at this point what the president could really do because the Russians have really decided that they don't really want to be going along with the OPEC plan any longer.
Yeah, they seem to really have dug their heels in, and it seems like he tries to honor a relationship with them as well. So maybe he's kind of stuck in the middle and not necessarily can resolve the concerns or the dispute that we're dealing with. Let's talk about how we're getting kind of conflicting information, though, because we had the API, the inventories yesterday on the close, and, well, they reported a draw of 1.25 million barrels. Again, everybody's talking about these demand concerns, the destruction in terms of demand. My car is parked outside. I don't think it's moved in 5 days. I mean, can you talk to me about why we're still seeing draws in terms of weekly inventories?
In terms of that draw we saw, what was that, 1.247? I think EIA is expecting 2.9 in terms of a build. Look, I'm gonna take those API numbers with a grain of salt. It's one backwards-looking number for this week, and I think everything that we do is on a rate of change basis. So if I see the trend markedly change, then maybe I'll consider this something other than the anomaly that it is. But for now, I'm going to continue to see what you're seeing, which is no traffic, no demand, fewer and fewer jets flying, and more production. So I don't mind these little blips. I think for us, it's going to give us an opportunity to possibly get short the energy markets. And not just crude, but I think natural gas as well.
Raghee, today we're going to be talking a lot about the U.S. dollar and why it's in the news recently, some of the strength we've seen behind it. I've been talking about how the indices are trying to get a lift off the lows, gold seeing a bit of a lift off the lows, copper and crude, though, still seem to be kind of pegged or pinned down near these lows. Crude, 20 to 25 roughly. Copper came off that 197 low, I think it was, but it's been struggling to get anything going really to the upside, mostly consolidation. Do you think some of this comes to the strength in the U.S. dollar? Because one of the things you and I have talked about, and we're definitely going to discuss a little bit later in the show, is how strength in U.S. dollars oftentimes creates that headwind for commodities we always try and remind traders of.
I think in terms of what we're going to be dealing with in terms of that pressure from King Dollar, of course, look, we know strong dollar is going to create weakness in commodities, but crude's got a psychology going on its own. Even gold definitely started behaving in a way where margin calls were creating liquidations. I think that's why we saw gold rally to the top of the range as quickly as it did. I'm actually from about 1,700 down, a little bearish on gold in the near term because it is in this distribution chop. But in terms of crude, I don't see any reprieve for crude anytime soon. Maybe a rip higher, but I think it's going to be soundly shorted.
Raghee, the system seems to be taxed. What should we be concerned about in terms of, the next straw to break the camel's back, so to say, and ultimately, what should we be optimistic about in terms of crude oil markets and energy markets in general?
I get optimistic about crude in this way. I think patience is going to pay, and this is something I'm reminding myself. I'm getting phone calls from families, as I'm sure you are, what's going on, what do we do? And I'm always reminding myself of one thing. I did this in 98. I did this in 2008, and that is we're not going to get any bonus points for being first. I'd rather be a little late to the party at this point, because if we can see a bottoming process in crude, and I don't see that happening quite yet, I'm going to still look for opportunities at the top of the range to short. I'm going to look forward to shifting gears and being bullish. I think it's just going to be a matter of patience, and I think that patient investors and traders will be rewarded. And I'd love to be, again, talking with you at some point, maybe in 3 to 4 weeks, where we talk about crude starting to settle down, but I don't think we're there yet.
Raghee, at the top of the interview, you mentioned how markets are providing a lot of opportunity for traders, a lot to process, you said. There's also a lot of risk, though. We're trying to remind traders of that. And oftentimes when you see all this market movement, you focus on the opportunity, you forget about the risk until you're in the trade and it goes against you, and then you're freaking out and emotions kick in. Can you talk to us about what you're telling your traders to avoid finding themselves in that position and to basically trade simpler and trade smarter?
Trading simpler, thank you. That's exactly where we are, and thank you for bringing up the risk. I think that understanding risk management is important, but I think what we're trying to understand is what it means to be a risk taker. Are there ways to control risk? Smaller size is definitely what I'm preaching, using in many places where I would have been trading the underlying crude oil contract. I'm trading options on crude. It might be directional, as simple as just getting long a put or long a call, but I'm controlling risk with the asset that I'm choosing. I'm also giving myself plenty of time. I'm not in a rush. I'm not necessarily advocating a lot of short-term trading unless traders are very adroit at getting in and out. I think a longer-term time horizon also then sort of gets us ready for a little bit more tolerance for some of this volatility. But I think this is manageable, and I do, of course, want folks to remember to control risk. But we are risk-taking, so control how much risk you're taking by position size and avoid the major events. Avoid those major volatility events.